Ladies and gentlemen, good day and welcome to JB Chemicals and Pharmaceuticals Limited Investor Conference Call as of 27 Jan 2022. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jason D'Souza from JB Chemicals. Thank you, and over to you, sir.
Thank you, Stephen. Good afternoon, everyone, and thank you for joining us on this call organized by JB Chemicals and Pharmaceuticals Limited to discuss the acquisition of the brands and related assets from Sanzyme Private Limited. We have with us on the call today Mr. Nikhil Chopra, Chief Executive Officer and Whole-Time Director, Mr. Kunal Khanna, President Operation, and Mr. Lakshay Kataria, Chief Financial Officer. Before we begin, I would like to state that some of the statement in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is in the transaction-related documents uploaded to the stock exchange websites earlier. I would also like to highlight that as this call is organized for the specific purpose of discussing the Sanzyme transaction, you are all requested to limit all discussions to the current announcement. With that, I would like to invite Mr. Nikhil Chopra to begin the proceedings of the call. Over to you, sir.
Thank you, Jason. And good afternoon to everyone. A warm welcome and thank you for taking time to join us for this discussion on the acquisition of the brands and the related assets of Sanzyme Private Limited. I trust you would have had a chance to look at the related document that has been uploaded on the stock exchange websites. Now I will briefly summarize the main highlights of the transaction. We have acquired Sanzyme's key brands, portfolio and related assets across probiotics, therapeutic nutraceuticals and reproductive health markets for a consideration of about 628 crores. This excludes related taxes, stamp duty. In addition, we expect to invest around rupees 15 crores separately as a working capital for the acquired business. This transaction is funded through a mix of internal accruals and a short-term debt. It is expected to be completed over next 2 weeks, subject to customary closing formalities. The brands acquired are for Indian markets only. As some of you may be aware that Sanzyme is a leading player in the probiotic and hormone segments. Its flagship brand Sporolac, launched in 1973, is one of the leading probiotic brands in the country. Lobone is another multi-strain probiotic blend used to delay progression of chronic kidney disease and is one of the trusted formulations for leading nephrologists across the country. Sanzyme has also developed prominent brands in the reproductive health segment. Overall, these brands have combined revenue of around 160 crores as per IQVIA MAT December 2021 data. The acquisition expands the addressable opportunity of JBCPL by almost 6,000 crores across the segments. Further, we will now be among the top 5 players in the probiotic category, which is growing at around 12 to 14% annually. Within the country, gastrointestinal therapy market, probiotic has been one of the fastest growing segment and has delivered growth of almost 35% as per IQVIA MAT 2021 data. The top 10 players, including Sanzyme, accounts for 65% of the market. Sanzyme itself has a market share of 7.44%. Key drivers of the growth in probiotics have been well-recognized health benefits, possibility of expanding usage indications, and superior safety profile of the products when used for other medications. Sanzyme's range covers both the mass probiotic market through Sporolac as well as specialty products like Lobone and Oxalo that addresses the unmet demand in the niche kidney care segment. This is in line with our stated strategy for playing to our strengths in the nephrology segment. Coming to the reproductive health segment, the other significant area targeted by Sanzyme's range of products is also slated for a rapid growth over few years basis the rising incidence of infertility cases in India. Products acquired by us address both gynecological and sexological segment. Sanzyme's existing distribution network, over 100,000 healthcare professionals, number of hospitals and more than 300,000 pharmacy cover general physicians, consulting physicians, pediatricians, nephrologists, urologists, gynecologists and IVF centers. Currently, Sanzyme brands have major revenue contribution from southern and north part of the country. Now we will have multiple levers available to accelerate the next phase of growth with the combined entity of Sanzyme and JBCPL. There will be an opportunity for life cycle management of current portfolio, leveraging the existing brand equity as well as the similar profile of prescriber base. Synergy in therapeutic areas such as gastroenterology, nephrology and potential to develop OTX visibility across prescription and probably in the coming time OTC markets. The acquired brands derive a large part of their business from certain parts of the country. There will remain a potential for aggressive expansion, particularly in eastern part of the country, metro markets and part of South India. We will also be expanding coverage at generalist and pediatrician, introduce progressive SKUs, develop evidence generation and therapy shaping initiatives as we have been doing in JBCPL for last now 15 months, particularly in the nephrotherapies, and expand our portfolio and reach in mother and child segment. Going forward, our India business contribution is expected to exceed 50% of overall revenues. Driven by the planned initiative, we expect to accelerate top line performance and ensure business profitability. Post this acquisition, JBCPL's IPM ranking will further move up by 2 points. Today we are 27th rank company, 20th rank company. Will be 25th, 26th rank company. We are now even more excited about the future possibilities as we supplement our growth ambition in India and enhance value for all our stakeholders. On that note, I conclude my opening comments. We would now like to open this forum for an interactive session with all of you, and we'll be happy to respond to your questions on the announced transaction. Thank you all for patience hearing.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jeewani from IIFL. Please go ahead.
Yeah, thanks for taking my question and congratulations on the deal. If you can please talk about how the deal process was done, whether it was a bilateral process between you and the seller, and what was your reason for zeroing in on the probiotics and the reproductive health products, given that the market for these products in India is still relatively small and niche.
So, good afternoon. I'll take on the first part and then I'll request my colleague Concall to, talk about the overall probiotic space and, why, we are sort of excited and, about the overall probiotic space. So as far as the deal process is concerned, you're right, this was a bilateral process. Over the last couple of weeks, we've gone through an extensive due diligence exercise, right? And post that, we have sort of made an offer to the sellers, and concluded the deal. So I hope that answers your question.
Yeah. So it was a bilateral deal. So any metric which you can provide in terms of how you evaluated the purchase price for the deal?
So we've looked at a couple of considerations. One, there is always a market construct to, such deals. So we've looked at, relative valuation metrics, which are prevalent in the current market scenario. Also, I think the whole financial evaluation in terms of, what the assets bring to our P&L, both from a top line and a bottom line perspective, is, what we've taken into consideration. And we've also gone through, a professional valuation sort of process to value these assets.
Sure, sir. Yeah.
And Rahul, to your question on why probiotic and infertility asset that we have taken over. See, probiotic as a market is a very attractive market in India, and particularly at JBCPL, when we talk about our brands like Metrogyl, there is a lot of synergy in terms of co-prescription, which we can build on. And overall, the market has been also growing at a pace of around 12 to 14%. And when we see the range of products that we have acquired, we see a lot of opportunity in terms of geography where we can penetrate better as compared to the way Sanzyme was operating, and equally a lot of life cycle management that we can do with the existing portfolio, which will overall help us to build on this portfolio.
Sure, sir. And sir, now in terms of how this portfolio has grown over the past 3-year period, so if you can talk about that, and reps would we need to add to market this portfolio in India going ahead?
Kunal, you would like to take this question?
Sure. Yeah. So I think when we primarily look at the Sporolac portfolio and the historic growth rates over the past 4 years, the brand has almost grown at 11%. In addition to that, there are specialized probiotic brands in this business, which Nikhil alluded to, the likes of Loban, where the historic growth rate has been 50% and plus, and these are extremely progressive categories. The unique advantage of this probiotics portfolio, which we are talking about, is that it straddles across the mass segment, which is very core to the business model and go-to-market model of JB, essentially the CPGP prescriber category, through the Sporolac franchise, where the cost of therapy, per day cost of therapy, can range anywhere between 18 to 24 rupees. And it also allows us to capitalize on the specialty segment. Again, the nephrology, therapy base, which again is very core to JB's overall business model, and allows us to look at specialized products in chronic kidney dysfunction. There, the cost of therapy can be as high as 160 to 240 rupees per day therapy. So we are getting access to a wide range of probiotic segments through this portfolio. More importantly, in line with our core strength, our prescriber focus, CP, GP, pediatrics, as well as nephrologists. That is very core to as we look at this play. From a feet on street, what kind of sales and marketing engine we require. Essentially, will be close to 350 people, sales and marketing people, who will be transitioned into JBCPL, and as a result, it will be a fully integrated, business, just like any other division in JB. And these 350 will spread across 3 business units.
Sure, sir. And sir, last question from my end before I join back the queue. In terms of EBITDA margins, your presentation states that this portfolio is generating north of 35% EBITDA margins. But given the synergies which you can derive in the portfolio because you are already participating in the gastro and the nephro segment, do you think that you have an opportunity to improve EBITDA margins for the acquired portfolio further over the next 3-year period?
Let me take that on. I think our first task really would be to look at, accelerating the growth, like Nikhil alluded to, and basically really building synergies from a go-to-market perspective, right? So our first focus really will be actually to put more investment behind the brands, scale up in new geographies. Over a period of time, like any other business, obviously our endeavor would be to expand margins, but not in the near short term.
Okay, sure, sir. Thank you. I will join back with you.
Thank you. The next question is from the line of Neelam Punjabi from Perpetuity Ventures. Please go ahead.
Thanks for taking my question. My first question is, as a part of the transaction, are we going to add any manufacturing facilities? And my second question is, will this acquisition create any goodwill on our books?
So let me take those two questions. We are not intending to add any manufacturing assets as a part of this acquisition. And to your second question, no, there is no goodwill getting created in the books. The consideration is primarily towards the brands.
Okay, that's helpful. And would we incur any additional costs in terms of increasing brand promotion for the acquired portfolio?
Yes, like I just responded a minute ago, we will look at scaling up the investment in these brands in the next 1 or 2 years to accelerate the top line growth. But over a period of time, I think our endeavor as a management team is to accelerate the overall EBITDA margins.
Got it. That's it from my end. Thank you.
Thank you. The next question is from the line of Abdul Qadir Puranwala from Elara Capital. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. So just wanted to understand, are any of these brands that you've acquired under price control?
No, negligible part is under price control.
Okay, none of them. So second part of my query was, if I look at the sales breakup, that is of the 160 crores, the large part is again just concentrated towards the two brands. So any specific reason why we have acquired, apart from the probiotic, we have ventured into the reproductive health as well, and what could be, the market size in these 4 to 5 brands on the reproductive health side, and accordingly, what is the opportunity we'll try to eye over here?
So let me start and then Kunal can come in. First of all, with Sporolac being added to the family of JB, today at JB we have 5 brands in top 300. And for a brand to be in top 300 as reported by IPM, the threshold has to be $10 million. So it gives us an opportunity in terms of what we spoke earlier, by doing the right life cycle management of the portfolio, looking at how we can exploit the entire geographical footprint and a lot of synergies that we can draw. We are looking at that this will be the 6th brand in the coming time in top 300, which will be a part of JB family. So that is what Sporolac brings on the table. On the infertility part, Kunal, would you like to come in?
Yeah, when we look at this overall opportunity across probiotics, reproductive health and therapeutic nutraceuticals, we are almost talking about increasing our addressable opportunity by 5,000 to 6,000 crore. Probiotic forms a significant portion of that, and so does reproductive health. The top 5 brands which are coming as part of this consideration are, of course, Sporolac and Globin, progressive categories on the probiotic space. But even the other brands on the IVF side, which again is a huge addressable opportunity, like Gynogen and Pubigen, are all plus 15 crore brand and among the top 5 brands in their respective categories. We already have some level of equity with the gynecologist segment, and we would want to build on that with the portfolio which we are getting in. Yes, but the focus continues to be further invest and build on the probiotic space.
Sure, sir. Understood. And just a final question, if I may. So in your opening remarks, Nikhil sir mentioned that these brands are only for India specific. So is there any contractual agreement which would bind us from not launching these brands in the international market as well?
Let me take this question. The use of trademarks is restricted to India only. So all the brand names will be used for India market.
Sure, sir. Understood. Thank you so much for answering my questions.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, hi. Good afternoon. Congrats on this acquisition. One question on Sporolac in particular. So when I look at the usage of this drug by the patient, am I right in assuming that this will be used largely for a short-term purpose, let's say mainly used for, let's say, 4 or 5 days by a patient and then discontinued. So Loban may be different, but just want to check this assumption.
Yeah, it is a week to 10 days along with the course of antibiotic.
So today it's a 60 crore brand. How big you think, let's say all goes well, you grow it, etc., because it's not a chronic drug, how big you think this brand can become?
See, we will not like to get into any specific figures that how big we want to, but currently, as we stated earlier, this brand is growing at around 10 to 11% and the market is growing at around 12 to 14%. So with the right strategies in place and the synergies that we want to build in this brand coming to JB House, we are looking at how do we in short to mid-term start delivering market-beating performance. And as I stated earlier, we would like this brand to be in top 300. That is what we can say at this moment of time.
So in terms of indications, is diarrhea the most important indication this Poltec is used for? What are the other indications which are large part in terms of 64 contribution?
So this is, yeah, yes, Kunal, yes.
Yeah, so diarrhea continues to be an important part of the prescribed indication. It's also to an extent used in IBS. But yes, diarrhea and antibiotic-associated diarrhea is one of the major indications in which this brand is prescribed. The larger point remains that we are talking about a category which is still at a very, very nascent stage. And herein we have a category leader. Our endeavor will be, as Nikhil mentioned earlier, to drive efforts in terms of therapy shaping. And, if we are able to expand the category with a brand which is a leader in its segment, we are fairly confident of building on this platform.
How big is the product market today, which let's just suppose like a 60 crore, if you look at the other products put together for diarrhea and
the overall addressable opportunity is in the range of 1,800 to 2,000 crores.
That's as of today. That's the market.
Yes, that's the market today overall for probiotics.
And so out of the 1,800 crore market, those drugs are largely used for diarrhea and IBS, is it?
I would not really say that all of that is used for diarrhea and IBS. I think the core part out here is it helps in improving the gut. There are many gastro disorders which lead to some kind of degeneration of the flora in the gut. During diarrhea, it's something which is quite evident and patients want to, use it. But we don't really want to get into the science of it right now. I think what we can surely say is the category leaders play a very, very important role in the regeneration of the gut during different indications, and diarrhea tends to be a major part of that. Having said that, a combination of those strains are have been used in many other disorders like kidney disorders, for example. Loban is a formulation which is made of 3 to 4 different strains. Part of it is also the sporolac strain, but it's used for a very different indication, wherein the major function is absorption of toxins. So wide variety of indications are there for probiotics to grow upon.
Sure. And just one question. So in terms of synergies, so Metrogel will be the closest product in your portfolio. Is it today, are probiotics largely co-prescribed when, let's say, gynecologist is writing Metrogel for, let's say, some indication? Have you seen that?
So the way you have to see this is there are many issues on the gastro side. There could be standalone IBS-related issues, diarrhea issues, and then there are antibiotic-induced diarrhea, right? So that's what Nikhil was alluding to. Given that with antibiotics prescription, there tends to be a tendency of diarrhea being induced. There tends to be a co-prescription behavior which is adopted by doctors. But that does not mean that is the only indication. But there's a lot of synergy and benefit which can be derived from that. The important thing is sporolac strain is better absorbed with metronidazole, and we certainly see a great opportunity there because of the co-prescription pattern. And what it really helps us achieve is that with this co-prescription behavior, it allows us to play to our strengths of go-to-market business model.
And I have one last question on Loman. This seems to more of a could be like a chronic usage, but given the size and the time it has been in the market, it doesn't seem to have taken off somehow. So I don't know whether that is due to the product or that's due to the lack of distribution strength. But you have mentioned the brand has a good distribution strength. So I couldn't understand why Loman has not taken off. Why is it only 20 crore kind of drug even now?
The important part is you look at the progression over the last 4 years. Any specialized or first in its class category takes some time for it being adopted and prescribed by the prescriber community. What tends to happen is when a product or a molecule is new and unique in its category, prescribers take their own time in assessing the real world evidence patterns and how the efficacy of the drug is. And clearly, if you see the progression over the last 4 years, all the nephrologists have given this a thumbs up. We still believe there is a lot of opportunity because as we look at the prescribing pattern and the converted prescriber base for Loban, only 35 to 40% of the nephrologists are still prescribing this. Like Nikhil mentioned, our endeavor will be to build on the scientific evidence, further support it with more clinical data, and expand its usage in the CKD side, on the CKD side.
Just some clarity for CKD, how long is typically this drug prescribed to a patient?
The point out here is that it can be given in stage 2, stage 3. Given it helps in better absorption of toxins, it really depends on the patient profile and what kind of clinical symptoms does the doctor see. It's not so easy to say that as is the case in mass Sporolac that you prescribe it for 4 to 6 days. It's difficult to put a number there. For stage 3, where the toxicity could be high, the actual therapy duration could be much higher. So it just depends on the clinical profile. But it is meant for chronic usage.
Thank you very much.
Thank you. The next question is from the line of Nikhil Mathur from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Thanks for this opportunity. In fact, I think Anubhav has asked most of the questions that I was intending to. But just I'll slip in two more incremental of trying to build on his questions. You mentioned that like Sporolac is prescribed for 4-5 days. It's a antibiotic-led issues in the gut that because of which it is prescribed. Can it possibly cannibalize some of your key products? Because I believe that some of your products are also part of that indication or curative therapy of that indication. So is there a chance of a bit of cannibalization here?
Let me take this. We have negligible presence in the world of probiotic. And by the way, when you talk about Sporolac, basically the way I see this product is response. We will be positioning it in terms of healthification of the gut. So basically antibiotic-induced diarrhea, week to 10 days. What Kunal has been speaking about, irritable bowel syndrome, it can be prescribed for long term. And equally, we are looking at better life cycle management of this brand, where 30-40% of the revenue for the probiotic market comes from liquid formulations, which at some given time you will see us introducing. So it has got a variety of usage from different specialties, and it is not only antibiotic-induced diarrhea, but basically positioning it as a probiotic which will be responsible for healthification of the gut.
Okay. And sorry, I haven't got a chance to check. What are the price points at which Sporolac or other probiotic brands of this company are selling at?
I'll take this.
Yes.
So Sporolac has always been a trusted brand which shows very high level of efficacy at a very, very affordable price. The cost per tablet is in the range of 6 rupees. Even if it's TID or BID, the overall cost of therapy comes to around almost 18 to 24 rupees per day. as opposed to some of the other strains, which are there in the market, where a BID dose can go up to almost 84 rupees. And that's where Sporolac has a very, very unique advantage to be able to drive the same level of, efficacy at a very reasonable price. The other thing which one has to be very, because when you really look at the probiotics business, what we are really talking about is the strain. And we have a lot of confidence in the strain now, which is lactobacillus. Point number one, it's the most used and trusted one with a lot of real-world evidence data, and most of the research has happened in probiotics with respect to this strain. In fact, doctors see this that as far as efficacy goes, possibly this has the maximum real-world evidence data on Indian population. And the other important part with respect to this strain is, and why it helps to kind of manage the price also, is that the stability of the strain is better controlled across varying temperature. So that helps in seamless distribution. You don't necessarily need an active cold chain infrastructure, and because of the stability, it has mass adoption even amongst the GPCP prescriber base.
Okay. And the way we are seeing that there's an intent by companies to consumerize some of the brands, focus on wellness. So is there a possibility that, a product like Sporolac be consumerized or some tweaks be made so that it is out of the scheduled drug category and be part of the OTC franchise? Can that be done? Or can other companies launch such kind of products with incremental innovation, not like a Sporolac, but a bit more targeting the same area in a more wellness kind of a construct?
We want to play on the prescription side. It's essentially a drug, and we want to play on the prescription side. Over the near and midterm, as we look at life cycle management opportunities and see what the OTX potential is, we will try to define different pathways for possibly different variants. But the prescription, the efficacy, the fact that it's adopted by a large set of prescribers is its strength, and are the strength of the brands across the probiotic range which we have taken, and we want to continue to build on that. For us, the important point, as Nikhil said, is therapy shaping. Over a period of time, as we look at some life cycle management opportunities, there could be some brands which will take more shape in the form of OTX, OTC play, but it's too early to comment on that.
Okay, sure. Thank you so much, and congratulations on this deal.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Karan Surana from Monarch AIF. Please go ahead.
Hi, thank you for the opportunity, and congratulations on the acquisition. So, sir, I just had one question since my other questions have been answered. What is the likely next 12-month projection, given the MAT value for us was 160 crores, but FY22 revenues is just around 135 crores. So any color on that would be really helpful.
So, Karan, the way we are looking at, as we have got the asset, and it will need some short to mid-term transition, but with the entire agenda of agile execution that we bring on the table from the house of JBCPL, we are looking at that by the end of the year we should look at delivering market-beating performance. And what I stated earlier, that the biggest franchisee that we have got in the form of Sporolac, which is mass probiotic, and equally specialized probiotic, which is Oxalo and Lobun. These are the products which should see better distribution and availability, and equally the focus that we will bring on the table when we start looking at the synergies that we want to build from the house of JB. So what we have kept as the aspiration that with smooth transition in place, as we are working on, we are looking at how do we, by the end of the year, start delivering market-beating performance in this category of products.
Okay, sir. So there is no specific numbers that you're targeting, just maybe meeting the market as of right now. That would be a guidance, right?
Yeah.
Okay. Thank you. Thank you for this. Thanks. That's all from my side.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is a follow-up from the line of Rahul Jivani from IIFL. Please go ahead.
Yeah. Hi, sir. So in terms of funding the deal, you have stated that it will be equally funded through internal cash accruals and short-term debt. Any reason for funding it through short-term debt as well, given that our cash balance on books is more than the purchase price which we need to pay for the deal?
Yeah. Rahul, let me take that. So I think what we intend to say is, one, it is not an equal funding between debt and internal accruals. The deal will be largely funded through internal accruals. We may need to rely on some short-term debt, because apart from the purchase consideration, we also need to pay certain GST and stamp duty. So that will take away most of the cash, that we have on the books. And hence, for some of our working capital requirements, we may need to sort of dip into some short-term, borrowings, which are going to be for a very short tenure, right? I hope that's
sure. Okay, and the debt rate for the short-term borrowings will be in the range of 7 to 8%.
I wouldn't want to give a specific guidance on the interest. It's a bit of an evolving scenario, but see, given the size of the debt we're talking about, it's a matter of few months, right? So, don't get too worried about, what's the rate of borrowing.
Sure, sir. And in terms of the purchase price, if you can allocate it between intangibles and because you said you would not be having any goodwill related to this. So how would the purchase price be allocated, and what kind of an amortization impact you are looking at from the amortization of the intangibles?
So overall, like I mentioned earlier, a bulk of the consideration is going towards the brands, right, which is the intangible we have got. And this, from an overall amortization perspective, will mean an amortization rate of about 25-26 crores a year, right? This will be a long-term amortization given we are buying brands.
Okay, so does that mean you are factoring in a 20-year amortization period?
Yeah, almost of that, sir.
Okay, yeah. Thank you, sir.
Thank you. The next question is a follow-up from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yes, I've got 2-3 follow-ups. One, you mentioned that for Sporlac, last 4 years CAGR was about 11%. I just want to get a rough sense in that how much is the volume growth of this product roughly, right?
Kunal, you would like to take this?
Yeah. So when we look at the volume growth versus price, pre-COVID, because that's the right way to look at things, the volume was close to 5%, and the other part was attributed to price growth.
The reason I asked that question is because this category makes so much sense. It's given the benefits of taking Sporlac or any other probiotic or lactobacillus for diarrhea. I'm a little surprised why this segment hasn't taken off so far. I mean to say this segment should have been much larger. I'm just trying to understand that, for example, for Sporlac, I don't know whether it was company-specific problem in promoting the brand, or was it the category problem that volume growth is slower?
So we do believe that the brand was underinvested and underleveraged. When we look at the actual growth of Sporlac close to 11% versus market growth of 30%, and some category leaders, others being in that range, there is certainly a big potential and opportunity for us to invest more. There are some brands, potentially some divisions where, the marketing muscle and power and possibly the ability of other organizations to drive these synergies across other segments, like what we are talking about, what we'll be able to do with Sporlac did exist. So certainly we believe we have a huge opportunity to further drive volume growth, given that traditionally it was potentially underleveraged and underinvested. And there are different levers, which really drive the confidence, for us. Clearly, what we have mentioned is life cycle management. Nikhil alluded to the fact, if you really look at the probiotics business, the largest growing category is liquids. And Sporlac currently has no real liquid form, right? That to an extent explains the difference. We have a huge opportunity with some combination of strains also. From a long-term perspective, it could be an FTC with combination of a certain existing product category. We have already spoken about synergies with our prescriber base, where we want to play to our strengths. PDR, GP, CP, nephrologists clearly are top 4 prescribers, and so is the case with Sporlac. And there is distribution reach and the penetration, and what gives us clear visibility around that is if you really look at Sporlac as a brand, it has negligible presence in 3 to 4 of JB's highest, revenue realizing states, which are essentially West Bengal, Kerala, Bihar, and UP. These are pockets of strength for us, where Sporlac has little to negligible presence. So, a combination of all these levers give us good confidence that we'll be able to further build on to the rich legacy which has been created.
That is helpful. If you can also comment that why is the total market not growing like 20? What I'm asking is why it's not gaining a lot of market share from the other options out there?
I think the probiotic category is still growing at a very healthy rate, 14%, right? It's unfair to compare them to what's happened in the Indian pharma market in the last 12 to 18 months, because therein we see aberration, certain categories really exploding, and certain being absolutely muted because of the overall scenario. Probiotic was a segment which in the first wave pretty much found, as was the case with a lot of gastroenterology product categories, the demand during the first wave, when it started, significantly suffered. But if you really look at it from a steady state scenario, this category is outpacing the IPM by almost 300 to 400 basis points.
Okay, sure. Just a couple more questions. One is 30 reps. Roughly how many promoting Sporlac out of that?
So the way to really look at it across 3 divisions is, the first primary anchor division is for the Sporlac franchise, where we have a team of almost close to 120. And the remaining numbers are broadly equally split between the second and third business. The second business largely comprises of the specialty probiotics. Again, we see a great potential there. And the third business is largely the reproductive health, which combines the hormones therapy and the IVF range.
So safe to assume roughly about, let's say, close to 2/3 of the reps will be largely, at least will be promoting that. So 2 divisions will be what, right?
Sorry, so the first division is Sporlac focused probiotics. The second is probiotics across other categories, and the third is, largely reproductive health. Yeah, that's correct.
And last question is on the margins of the company. So if I look at the sales force productivity is quite low at about, roughly close to about 3 lakhs per month. Gross margins are about 70%, but EBITDA margin is still high at 33-35%. So the question here is that this looks to be largely, as of now, more GP dominated product. Maybe I'm wrong, but given that low sales force productivity and gross margins are not too different from, let's say, GV makes or what average company makes, the margin seems to be higher at somewhere between 30-35%. So what is the component which is favoring in this portfolio that margins are higher? With that sales force productivity and gross margin, typically I would have thought that EBITDA margin should have been more closer to 25% here. So what's so different in this portfolio that margins are higher?
The way to really look at this business is that there are selected brands driving high productivity amongst a limited field force, right? Usually when you really look at probiotic business, where the brand is across a team of 250, 300 reps in one single division and then spread across, the productivity does not go beyond the 60 to 80,000 range. It's actually the strength of the brand equity, which helps drive such great productivity that so far the organization has been able to reach these kind of 60 crore numbers even with a field of force of only 120 odd. So that's the way to really look at this business.
But clarity there that total field force productivity of the company as a whole, the portfolio that required is still low at 3 to 3.5 lakhs, right? So and the productivity is, my question is, productivity is less than the Indian pharma market average. And the gross margins are close to the IPM average, but productivity is lower, but the EBITDA margin is much higher than the average.
That's to an extent right, and also the organization historically has been slightly conservative on the sales promotion and A&P spend, and we go back to the point which Lakshay was making. We certainly want to invest more in this category and more on the brand side.
Okay, sure. Thank you. Very helpful. Thank you very much.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Thank you very much, sir, for the opportunity. Sir, I joined little late. Can you just throw out that there are two categories of one is specialized probiotic and another is general category. So what will be our business approach? Will be through prescription route or OTC route?
It will be, I think you joined late, Bharat. Kunal already had answered. This will be basically through prescription route. When we talk of Sporolac, it will be more a mass probiotic approach. And when we look at Lobone and Oxalo, which are specialized probiotic, basically in the field of chronic kidney disease, it will be a specialized approach from in the clinics of nephrologist and MD medicine. That is what we want to do.
Okay. Thank you very much, sir.
Thank you.
That's all from my side.
The next question is from the line of Vineet Mehta from Samiksha Capital. Please go ahead.
Sir, my question was regarding that we are going to manufacture these in-house. So what would be our utilization level after acquisition, after we produce these brands from our factory?
Just a clarification here. We are not manufacturing these products in-house. We have a very strong, supply arrangement to ensure business continuity. These products will continue to be sourced from the existing vendor base.
Okay. And my second question was regarding the ROC. If I look, you have acquired for around 630 crores, and if at the current EBITDA margins, the ROC would be around 9-10%. So how are we planning to increase the ROC?
Let me take that. I think you're right. Right now we begin with sort of a high single-digit ROC, on the date of acquisition. But as we sort of accelerate the growth for some of these categories, right, we do believe, the whole sort of benefit of increased top line will also flow into the bottom line, right? So over the next sort of 3 to 4 years, our endeavor would be to clearly exceed double-digit ROC even on this, acquired portfolio. That's our approach, right now.
So after 3-4 years, it would be at the same level as the current.
I think that is a bit of a tough ask. I mean, we are upwards of 40% as we talk today. I don't think 8-9 is becoming 40%, but getting to about sort of 18 to 20% sort of a range on ROC in the next 4 to 5 years is something we will surely aim for.
Yeah, thank you. That's it from my.
Thank you. A reminder to the participants: anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Charulata Gaidani, an individual investor. Please go ahead.
Yeah, hi, congrats on the deal. My question pertains to the cash burn or investment that you expect over the next 2 to 3 years, if you could quantify.
So, ma'am, at this stage, what we've really looked at is, utilization of the existing cash. Like I answered earlier also, we may need, some very short-term debt for a few months to manage our working capital. But other than that, there is no sort of real leverage all the payments, etc., we make on GST, etc., will come back to us as credit. So from a funding perspective, we right now are fairly comfortable. From a capital allocation perspective going forward, our endeavor really is to, I think, focus only on, very strategic opportunities, right? Whether it's on the capex, the organic capex side, and any potential sort of inorganic opportunities that come our way, right? But endeavor will basically be to keep debt as low as possible. Yeah, our focus right now was completely to make sure, that we basically use the cash that's available on the balance sheet in the most judicious way.
Okay. Now, and my second question pertains to the difference in the for JB Chem and for the existing products. The existing base would be mostly OTC, right?
No, Charulata, this is all is prescription, which we shared earlier. This is pure prescription business of 160 crore as reported by IQVIA. Total prescription. Okay.
And how much has been the peak sales pre-COVID for this product?
It was close to 150-160 crore.
Okay. So it has been flattish.
Yeah.
Okay. Fine. Yeah. Thank you.
Thank you. The next question is from the line of Rahul Jeewani from IIFL. Please go ahead.
Yeah, hi sir. Just a follow-up question. You indicated that 350 would be the entire sales and marketing team. So how many of those are actually reps or the feet on the street?
Around 300, Rahul.
Okay, around 300. So that implies that the productivity of this portfolio is somewhere around 5 lakhs.
Oh, it is around 3 to 3.5 lakhs. Because the portfolio which you are acquiring has sales of 150 crore, and then you are talking about reps being 300. Yeah.
Rahul, it's the way you, Rahul.
Hello.
Rahul, it's the way you calculate the productivity with managers or without. So, but the numbers are broadly indicative of how you're thinking about it. Yeah.
Sure, sir. Thank you. That's it from my side.
Thank you. Ladies and gentlemen, we take that as the last question. I now hand the conference over to Mr. Jason D'Souza for closing comments. Over to you, sir.
Thanks very much, Stephen. I would like to just hand it over to Nikhil for closing remarks, and we'll end the call after that.
Yeah, I would like to thank all the participants, and we hope that we were able to answer all the questions. And once again, stating the presentation deck is available on the website for more details to be known. And we see going ahead this as a strategic investment that JBCPL has done in first 15 months of me being there at the helm. And we are looking forward with a smooth transition. This investment overall helps us in terms of delivering market-beating growth, which we continue to do at JBCPL. And with this portfolio coming in, what I stated earlier, this helps us to be in top 25 companies in Indian pharma market. And overall, look at that. How do we build better? How do we look at building overall value for our stakeholders and shareholders? And that is the intention overall at the company stage. So thank you once again, and wishing you all good health, and we continue to engage with you. Thank you.
Thank you. Ladies and gentlemen, on behalf of JB Chemicals and Pharmaceuticals Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.